Morning, everybody. 8:21 a.m. Welcome to my channel. Yesterday was quite volatile. We gapped down, and then we traded in a range. Right? I was able to catch a short on a failure. One of my pre-market scenarios failure to fill the gap higher. Shorted that. Got a 2R winner. Can't complain about that. However, technology, specifically semiconductors, were on fire yesterday. And when that's the case, the market's not really going to go down. And then you got a huge lift up. I think Netanyahu was talking or something like that, gave the market something to be excited about or something, and the market's ripped up, filled the gap, but then kind of held, pretty much closed right at the bottom of the previous day's range. What happens to be that as well? The 200-day moving average on the QQQ in the SPY. Dealing with a lot of levels, a lot of major levels. Currently, we're back to where we were yesterday, what I was talking about. All right, I'll show you really quickly here. So, we came into this demand yesterday that was also in my long scenario, right there. I was eyeing that up, and I was like, okay, I didn't really see a setup, but there it was. We pushed up, right? And then we came into a supply zone, which was right here on my chart. That's where I shorted and caught that move. Okay, but look what we were playing with last week's lows. We just couldn't really close below it. And then we lifted up, boom, right into that bearish for value gap. That's caused a little problems, right? And then we boom, right down, swept these lows. Right now, where are we? Back at last week's lows. And actually, the close from last week is also around here, which means this week we've done nothing. Now, on the NASDAQ, I'm not going to talk about all that, but there's your last month's lows. And we're right there again. So, it's crazy, this market. Okay, and I keep talking about it. Yesterday, we'll get into a second, technology was pushing up. I say this every day. Money keeps flowing into technology. Now, what I have to say about that, you won't see it as much if you don't track it off the open. Off the open. Not at the previous day's close. Off the open. Now, the last number I have here was technology was up almost 1.80% off the open. So that tells me money flowed into tech off the open, not from the previous day's close. If you look at that, it's going to not look at. You want to see what's driving the market today or on the open. Okay, we'll get into that in a little bit. Without further ado, today is OPEX and today is quad witching. Some people call it triple. Okay, but what's the quad? Well, futures rollovers contracts. That's number one. Today will be the last day of the previous contract. It's pretty much all the volumes of the new one, but today is the official rollover day. Okay. Then you have futures options. Then you have index options, and then you have equities options today. That's the quad. I think I saw $5.4 trillion coming off the plate today. So typically on a quad witching day, you tend to see volatility, like wild swings in the market. And then what happens generally sometimes is that large gamma strikes will pin there later in the day. Like I said, sometimes it happens a lot. Sometimes the pin doesn't happen. It can happen in individual stocks too, as well. It doesn't have to happen in the major index. I've seen it to the penny many times. Large gamma level, whoa. And all of a sudden, we close right there. Boom, pins right there. Okay? This market is wild. Okay? So, now we can get into it. Welcome to my channel. My name is Steve Gonzalez. I use market profile and buying profile to find structures in the markets, along with supply and demand, gamma exposure levels, the most traded price of the year, the week, the year, the month, the week, and the previous day. That is my edge, folks. Okay. When the market opens, I use my market internals. I want to see what's driving those markets off the open. That usually gives my bias for the day. Throw a little ICT in there, a weekly expected move indicator as well. Okay. Now, I do this every morning. Hopefully you join me. Subscribe, set that alert. Okay. I give you the market story, macro news, the economic calendar, the real deal of the markets, folks. Technical analysis, and then I give you the long and short trades, NASDAQ, the long and short trade scenarios in the NASDAQ and the ES futures later on, towards the end of the stream. Okay. Now, if you want in-depth coverage, you're going to join my Discord. That is Confluence Trading. Okay, go to my YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. Okay, yesterday I didn't go live. It's the first time I haven't gone live in a while. All right, I was trading, obviously. My calls, my pre-market scenarios hit. I capitalized on one of them. Not an easy market. Even when I shorted, I was like, ugh, because it came into supply, right? So I was like, okay, balanced profile. And I honestly thought I was going to get stopped on that one. But I didn't. And in a regular market, when you have technology up that much, you're going to rip. But all the other sectors were weak. That's why we didn't move up. Okay? And I'll show you that in the market internals. All right, now what I'm talking about is what you'll see and what you'll get when you're in my Discord with me. Okay? Now that I'm giving pre-market scenarios, now that I'm giving my take from the morning, giving my internals update around right after 10 a.m., okay, that are time stamped, you'll see actually my calls on the market. And then at the end of the day, I say what the market did versus what I talked about, my pre-market scenarios are. Okay? This is rollover week. I've still been hitting some of them. But usually, once we get over this, I'm even more accurate. So you can just go ahead now and look at my pre-market scenarios, look at what happened in the market, and go, oh, boy. Yes. Okay? Yes. That's why I say, let me be your indicator. I'm not going to steer you wrong. Okay? Now let's get into the futures watch list here. What is going on with our markets? Well, the VIX is back up. Okay? 2.45%. Gold and silver got slaughtered lately. They are up today. 1.67. Silver's up 1.65. 10-year yield is up. That's not good for 30-year for mortgage rates, okay? Bitcoin is holding 70K. It doesn't know what to do. Dollars kind of flat. Ethereum flat. Dow's down 0.22. ES down 0.26. 30-year bonds are being sold. Russell's down 0.32. Nasdaq's down 0.35. And your laggard today is crude. So, being that crude is down, I would say, and what we just did in an hourly chart, I'm not going to say bullish where we go to the moon, but we just swept major support from yesterday and we closed back inside the range. This is looking like a double bottom. Okay, so we'll have to see. Now, moving on to Mag 7 Plus. Nothing is positive this morning. Okay. Who's over the 50 percenters? We'll go here. Start here. Netflix down 0.32. Amazon down 0.36. Microsoft down 0.47. Google's down almost a 0.5%. GE down 0.55. Apple is down 0.59%. Okay. Top sectors. The mining stock getting love. It got smoked yesterday. Up 0.91. People maybe think that's the pullback. Who's lagging today? Oracle down 0.78. Palantir down 0.85. And Salesforce down 1%. Moving on to sectors. Energy. Interesting. Energy is, now that's what I'm saying. Crude and energy aren't always lockstep together. Look, energy is up 0.42. But crude is down. So, there you go. Now, let's look at the laggards today. Discretionary down 0.19. Semis down 0.30. And technology down 0.44. Remember, they were the leaders yesterday. They were the leaders yesterday. Okay? You can see right here, that was up. Look at semiconductors off the open yesterday. Off the open yesterday, they were up 2.84% off the open. 2.84% off the open. Yeah, I'll say it again. Almost 3% yesterday. AMD, Broadcom got love. Okay? Now, technology, which encompasses semis, was up 1.79 off the open. That's what I'm talking about, folks. That's what I'm talking about. Market was not going to go down. Okay? Alrighty. Now, we're going to get into the economic calendar, which is weak today. Not much data to go over. However, there is people talking that's obviously pivotal. Okay? Now, Fed Chair Powell is speaking tomorrow. Who cares about that? Well, that could happen Sunday night futures. You never know. It's gonna. So there's nothing today, really, right? But what do we have? Trump's schedule, right? Right here. President participates in executive time. 10:30. President participates in his Commander-in-Chief trophy presentation. 1:25. Out of town travel. 1:30. President participates in a policy meeting. Okay. Now go one more step further. Here's 8 o'clock. Fed Bowman speaks on Fox. 8 o'clock. So he's speaking. 8:30. Fed Waller speaks on CNBC. So they've been talking. Okay. Who knows what's going to happen? Okay. Who knows what's going to happen? Now, the only thing I can see here, and I don't know how much weight I'm going to put into it, Trump mulls to occupy or blockade Iran's Karg Island. This caused crude to spike, I guess, initially, but then fall back. I don't know. Okay? It's your guess is good as mine of what is really going on. What I can possibly see, we might be bottoming, hitting those 200-day moving averages. I don't know yet. Okay? Now, let's look at some news. Let's look at here. Let's see. Oil. There's just so much crazy things going on. What else is here? FedEx. We don't really care about that. All right, let's go to some just news headlines here. Powell's decision on Fed. This is another thing too. Since Powell's like indicted or whatever, he said he's going to sit and he can stay without Warsh coming in until this, I guess, works out. So Powell's decision on Fed board seat could shape Warsh leadership, right? Amazon plans smartphone comeback more than a decade after the Fire phone flop. Tesla in talks with Chinese firms to buy $2.9 billion worth of solar equipment, sources say. Unilever in talks to sell food business to U.S. rival McCormick. This is big with Super Microcomputer. They're down pretty big this morning. U.S. charges 3 tied to Super Microcomputer with helping smuggle billions of dollars of AI chips to China. 3 people associated with artificial intelligence server maker Super Microcomputer Inc., including its co-founder, were charged with helping smuggle at least 2.5 billion of U.S. Jesus. Not good. And they were known to cook their books or something not too long ago. Not good. Okay. U.S. stock index futures dipped in volatile trading as the Middle East conflict neared its 4th week, unsettling energy markets and leading investors to sharply reassess expectation for Federal Reserve rate cuts. Oil prices rose, even as major European countries, Japan and Canada, signaled willingness to help ensure safe shipping through the Strait of Hormuz. And the U.S. detailed plans to increase oil supply, which I told you that doesn't really matter. Okay. Gold's prices rose on bargain hunting. However, the precious metal was on track for the 3rd straight weekly loss, weighed down by hawkish Federal Reserve that dimmed expectations for near-term rate cuts. Okay. Now, is there anything in here that I'm going to see? Let's see. That we didn't talk about. Nope. Nope. All right. What we're going to do now is we're going to look at some breadth charts. All right. Let's start off with the breadth. Okay, look at this breadth. Now, this is S&P 500 percentage of stocks over their 50-day simple moving average. We're down to 28%. Notice when I talked about this for a while, I was just like, oh my God, it's not, the market's not that weak. Well, it is. Can it go farther? Sure. It's getting pretty oversold. Okay, that's what I'm talking about. All right. Now, we're going to go a step further here. Let's go into the bullish percent index of the S&P 500. So, it weakened yesterday a little bit. Where 40% of the S&P 500 stocks are on buy signals. Obviously, we could get weaker. We'll have to see. All right, moving on. Let's go to the NDX. NDX. Actually, the NDX yesterday weakened a little bit, 42%. Okay. We got to take a step one further. The technology sector. This is really what I want to concentrate on. Notice that's at 53%. They're on buy signals. This, folks, is what is preventing our market from falling. Okay? This is preventing our market from falling. Notice with the software crash we had down here. Okay? That's where we had a crash in software with Anthropic and Claude Code. That was the crash. So this is where we baked in a crash in the software space, ETF IGV. And what's been happening is money flows are coming into this area every day. So it makes the market weird because technology is the largest market cap weight sector in the S&P 500, around roughly 33%. If money is not coming out of there, the market is going to have a very hard time going lower. So that is the canary in the coal mine. If today we see technology having a red day off the open, our markets will break this 200-day moving average. If it's another day of money flowing into technology, these markets will not go down again. They will not. So pay attention. I'm going to be watching this very closely today. Every day, I would say majority of them, technology has been leading the markets off the open. Money gets flowed into there every morning pretty much. And then I'm like, this market's just not going to go down. Now, does it go down pre-market and then we go up? Yeah. But as far as the day, okay? So pay attention to that. Now, one step further, we talk about internals. Okay? This is what I'm talking about. Look at that. Talked about it. Look at technology, financials, consumer discretionary. You're not going to go down, folks. Look at the internals all day. Positive, positive, market cap weight, market cap weight. There's your divergence with equal weight. But market cap weight is how our market works. You were never going to go down. Each time, you were not going to go down with semis and tech leading. This is where, I call this the WAD down here, weighted AD, is crucial for my trading because this doesn't make me look at red prices and going, oh my God, this is going to bust lower. Oh man. Okay? It just tells me this market internals does not have the internal to go lower. It doesn't. Okay? Now, moving on. Hourlies. Hourly charts, folks. Let's talk about it. Right. Let's do it. Okay, hourly chart. Oh, some large orders hitting that tape. All right, so look at what we're doing here. Okay, We have in the ES major demand zone. That look at that little tiptoe in there, and that was all she wrote. Market couldn't go back. Now we tiptoed in there again. Got bought again. Now the more we hold here, obviously it's bearish. All right, that means the market's saying we're accepting the lower prices. So you can't disagree with that. And we have Middle East tensions going on. You cannot say that is not happening. Okay? So, what am I looking at here? We have a sweep into demand. Okay? We have a bearish fair value gap right here, this purple box. But look at this trading volume from yesterday. See how it's kind of battling the market right here? That makes sense, right? Now, we came into this bearish FEG and find some selling. Okay? So, there is major supply right around here, around the 66.70 area to 66.80 and change. Okay? If this market cannot chew through that today, we're going to stay in this range. All right? This could be it today. Boop, boop, boop. Now, if the market really catches a bid, it really needs to break the 67. Let's see here. Let me get the level for you guys. Really needs to break the 66.95s. Call it 6700, but 67.95s. That way it could start to move up. Okay? That way it could start to move up. Otherwise, the market, if it comes down here, like we swept, if you get another discount a little lower, somewhere in here, and you get a higher low, then you can chew through this fair value gap. Now you're going to test this area, right? And I would be like, probably take some off here, unless this market's rip roaring. And then you could do something like this and then go, uh-oh, that was the bottom. Okay? Now, this analysis isn't going to be too much different in the NASDAQ. Let's look at the NASDAQ together. Okay? Here's the NASDAQ. What do you notice? Tiptoe into demand. I talked about this yesterday. Look at that. This last month's lows is a level that the market knows about, right? Look at that level. Back and forth, back and forth, back and forth, back and forth, right? Tried to go up. What did you hit? The most traded price yesterday. That's that little box right there. Into what? A bearish FEG. What do you have here? A double bottom with a little sweepy into demand. Okay, same thing. If we get a discount here, where you get another higher low and another one, that could fuel us to go up to this heavy supply around 246s, let's call it. Right? And like I said, if we have problems here, then that's probably the trading range today. Okay? If we're going to get that discount, whoop, higher low, this gives you the move up there. Now, this will not be easy without news catalyst to come through this heavy supply. Then you can maybe go up. Not going to be easy. We're really watching tech today, because that's what I'm saying. If tech is weak, we could roll over. But I'm seeing a lot of frothiness to the downside. Okay, I'm seeing it. I'm definitely seeing it. And you know what I skipped? Our daily charts. So let's go over those. I went over to hourlies before that. I usually don't do that, but I skipped it. So let's go back. I'm like, well, I feel like I'm missing something. So let's go over to SPY, because we have to go over it, right? Makes sense. So what did we do yesterday? Yesterday, you opened at the 200-day moving average. I'm sorry, you opened here. Underneath the 200-day, went back where? Friday's close, into last week's range. Rejected, closed at the 200-day moving average. That is not a shock. Where are we now? 655.90. 655.90. We are at the lows of yesterday. Now, if we zoom out, there's a really clear level here. Let's call it 652 to 650. That if this market wants to run, that's where it's going. Okay? I don't know though. All right? The longer we stay under the 200-day moving average, it's not good. Okay? Now, futures. Futures. Okay? Futures. We swept the prior session's lows, right? Trying to hold last week's lows. Can we do it? Can we do it? I don't know. Okay? Heavy supply right here. Probably why I told you that this is daily supply. Not going to be easy to get through that 67.13s. Okay? Not going to be easy. All right, let's look at the Qs real quick. The Qs broke its 200-day moving average, broke this big area. Attempted to get back into this big range here. Got rejected. There's last week's close. Okay, we closed right at last month's lows in the QQQ. That's a nice candle. That looks like a sweep of this balance, and this market could rip higher. But where are we at? 590.44s. 590.44s is right here. You're at the lower. You're more at the middle, right? A little lower than the middle of yesterday. Stronger than the ES. Okay. So what's the big level if we were to fall? Probably this level here. 580s. That 200-day moving average. Very important. Okay. Very important. Okay. Futures. Futures. Let's look at it. So futures here, we swept the prior session's lows, talked about it. Look, right at last month's lows. There's last week's lows. We're not even at last week's lows. See what I'm saying with technology? With the NASDAQ and NQ100, QQQ, we're not at last week's lows. This is what I'm talking about. And we just swept this session low. I'm telling you right now, I would not be shocked with two things. Market rips lower a little bit, or we just go up. And it's finally like, all right, here we go. Nice rally. I don't know, though. Remember, it's quad witching. So we got that to talk about as well, right? All right. Moving on. Now that we already did the hourly charts, because I went out of order today, we're going to go right into the market profile, volume profile. All right, let's talk about that. Okay. Alrighty, folks. Now, look at that level. Well, that's the Qs. Hold on. All right. Still. All right. We have a 3-session balance happening also right now. Okay. And the most traded price of the week so far is still all the way up here, 67.55. I have a feeling that's going to move down. Probably around here to 66.40s. That's a little bearish. Okay? That's a little bearish. Let me break this session up. Okay. Let's get into the ES long and short trade scenarios. Okay? Okay. So, what are we going to talk about here? Let's do it. We're going to go right for the long scenario. Okay? So, we're at the yesterday's most traded price, right? So, we're in a bearish fair value gap. You can see the thin volume here. Okay? We're in the middle, close to in the middle of yesterday's range. Not a great place to be. So what I want to see off the bat is a rejection right here, somewhere around 66.40s, the most traded price of yesterday. What I would like is a push down. Maybe break the 66.20s. Okay. Hold. Hold. Right into demand. Gives you a higher low. You get long if tech is leading. And you're going to go and rip up this thin volume and the bearish FEG. And you're going to target overnight VPOC. 66.70, which happens to be yesterday's close. Now, if you want to hold the runner to the overnight highs, 66.85, and try to nab the 66.92's yesterday's highs. Now, after yesterday's highs, if this market really catches a bid, this goes through 6,700 and goes all the way back up to 67.11, 67.20, just into the supply zone. Not going to be easy, but I said you have to take out yesterday's highs in order to do that. Now, second long would be if the market pushes back and takes out the overnight lows into demand, and then you sweep it, go back inside, higher low, long as well. Like I said, you would target the first 66.70 and see if you can get the bonus once you pass 66.85 and 66.92s up into the 67.20 area. That's all I care about for the longs. Shorts. Okay, we are in a downtrend. Sellers have had the upper hand. Pops get sold. Okay, so what would I be looking for in a short? Okay, we have thin volume right ahead of us. That means what? That either this bearish FEG acts as resistance, which is bearish, or you get some buying that rips right through that poor structure. Okay, so what I would look for is two things. If there's a failure, okay, inside this bearish FEG, anywhere between 66.34 to 66.60s. So say we push up into here and you get resistance. Whoop, higher low. You target overnight lows. Yesterday's low, 66.11 and then 66.07 overnight lows. See if you can go lower. Okay, if this falls apart big time and everything's weak, we're going lower, folks. Maybe down to 65.60s. Now, that's if it's picture perfect. Now, what you could also have is a drive up into that most traded price of the overnights, 66.70. Also means the close of yesterday. And this is where there's heavy supply and resistance. If you fail, go back under the 66.70s. Okay, and let's say the market internals are not very strong. That is your short. Overnight lows and see if you can get further down to the 65.60s. That's all I'm interested in. Now, we're going to move on to the NASDAQ. There's not much difference here in the game plan. Okay? There's not much difference. So, we're going to get right into the scenarios, the long and short scenarios in the NASDAQ futures. Okay? Let's do it. It's very similar. All right, we are going to start off with the long. Right now, we're at the most traded price of yesterday, 244.90. That is not surprising because this most traded price will probably move down here today. Now, what I want to see to be long, right? See how we're getting resistance in a bearish for value gap. That's temperature check. That's telling me, all right, we could go lower. If we do, fine. Let's push down. Like I said, if you don't sweep the overnight lows, you fail. You put a higher low in. That's your long targeting. You're going to target 2, 4, 6, 12s overnight VPOC. That happens to be yesterday's close. If you break the 24660s, the overnight highs, you have a straight shot to yesterday's highs, 24691s, and then it is free sailing to 249. Does that happen? I don't know. But you have to get through that heavy supply. Don't know if you can do it. Okay, don't know. I really don't. Again, number two, if you get a deeper pullback, sweep the overnight lows, right? And then you go back into this range, high or low, there's your long. Same targets as I just said before. That's the longs. Shorts. Shorts, okay? Same thing as the ES. We're in a bearish FEG. If this provides resistance, that should be a short, okay? However, what I would specifically like is a little push up, failure, high or low, go through that most traded price, 24490 of yesterday. Then you target overnight lows, right? 24319s, and see if you can tag last week's lows, 24213s. Now, like I said, just like in the ES, and now that everything's perfect, if we rip up to that heavy supply, 246s, and you get a nasty rejection, then you get a lower high, that's also your short. Okay? Target overnight lows, 24319s, or the 24324s, yesterday's lows, and you go for last week's lows. Now again, if tech is leading to the downside, it is relatively the weakest sector, we are going lower. If it is not, again, we are not going lower. I don't know if we break out, but we're just not going to go lower. Okay, that is my scenarios, folks. All right, smash the like button if you enjoyed that analysis. That would help my channel tremendously. All right, now I do this every morning. Hopefully you join me. Subscribe, set that alert. Give you the market story, the market news, the economic calendar, leaders and laggards, technical analysis, and I just gave you the long and short trade scenarios in the ES and the Nasdaq futures. Okay, if you would like to join me today, you're going to join my Discord. It's Confluence Trading. Go to my YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. Let me be your indicator. I just gave you scenarios. Okay? We have a game plan. When the market opens, I will have a new one probably because of what's driving the market, which I won't know yet. So be careful today. VIX is at 24.6. We have quad witching. We have a 200-day moving average in the SPY and the QQQ that we're playing around with. We have last month's lows in the Nasdaq futures, and we have last week's lows in the ES. A lot of liquid levels. All right. That's it for me today. Everybody, I hope you guys have a green day. Remember, no trade's a trade. And hope to see you in my Discord. If I don't see you in my Discord, I'll see you on Monday morning. All right, everybody, have a great weekend.